Hi, I am going to talk about case number 8 in Chapter 11. Chapter 11 is entitled The Substantive Tests of Inventories and Cost of Goods Sold, and this audit case is about errors. This is the case. As the controller of Love Company, which uses a periodic inventory system, you discover the following errors in the current year. The requirement for this case is that for each error, you indicate the effect on the ending inventory and the net income for the current year, and also the net income for the following year. But before I discuss the errors in this case, please take note that the formulas that are used are only two in getting the COGS, which is beginning inventory plus purchases minus ending inventory, and also for getting the net income, which is sales minus COGS equals gross profit minus the income tax expenses. Now let us talk about the errors in this case. The first error is that the merchandise with a cost of 17,500 was properly included in the final inventory, but the purchases was not recorded until the following year. Now let us see the effect of this error for the current year. So since the merchandise was properly included in the final inventory, then the ending inventory for the current year will be correctly stated. However, since there was no recognition or record of the purchase, making it understated, then the COGS as well will be understated because the purchases is addition to the beginning inventory. Remember, to get the net income, we have to deduct the COGS from sales to get the gross profit, and then deduct the income tax expense. Since the COGS was understated, then it would result in overstatement of net income by 17,500. This is because the COGS is a deduction to get a gross profit. For the following year, since the purchase was wrongly recognized in the following year, the COGS is overstated, thereby causing the net income to get understated by 17,500 pesos. The second error is that the merchandise purchases are in transit under the term of FOB shipping point. They have been excluded from the inventory, but the purchases are recorded in the current year on the receipt of the invoice 4,300 pesos. Now let us talk about the effect of this error for the current year. Since the merchandise was excluded from the inventory, then the ending inventory for the current year would be understated by 4,300 pesos. However, the purchase was recorded even though the merchandise was in transit. This would result to an overstated COGS. Since the COGS is overstated, computing the net income would result to an understated amount of 4,300 pesos. For the effect in the following year, the beginning inventory would be understated by 4,300 pesos since the ending inventory in the previous year was also understated by the same amount. With understated beginning inventory, the cost of goods sold would be understated by the same amount of 4,300 pesos. With the latter being understated, it would result to an understated gross income and also an overstated net income by 4,300 pesos. The third error is that the goods out in consignment are excluded in the inventory. The effect of this error is just the same in the second error. Since the merchandise was excluded from the ending inventory, then there would be an understatement in the ending inventory, overstatement in the COGS, and understatement in the net income, all for the current year. For the following year, the effect is still the same in the second error. Since the ending inventory in the previous year was understated, then the beginning inventory is also understated, as well as the COGS, thereby causing the overstatement of the net income. Now let us go to the fourth error, and this is merchandise purchases under the term of FOB shipping point have been omitted from the purchases account and ending inventory. purchases were recorded in the following year. The effect in the current year would be an understatement of ending inventory since the merchandise was omitted. Then the net income would be correct because the errors in the purchases and ending inventory would offset each other. In the following year, the net income is again correct because for the same reason that the errors would offset each other. The last error is that goods held in consignment from Tally Supply Corporation were included in the inventory. This error would have an effect in the current year, such as an overstatement in the ending inventory because goods that are held for consignment should not be included in the inventory for the reason that the goods are owned by Tally Supply Corporation. While there would be an understatement in the COGS, that would result for an overstatement in the net income. For the following year, the beginning inventory is overstated since the ending inventory in the previous year was overstated, which causes an overstated COGS and understated net income.
어릴 적엔 비가 오는 게 싫었어. 운동장 밖에 엄마 들 속에 안긴 너를 볼 때